We've got a news alert on Slack ahead of its direct listing tomorrow. Let's get to Leslie Picker at the New York Stock Exchange for the details. Les.
Hey, Melissa. The New York Stock Exchange revealing a reference price for where Slack will begin trading of $26 per share. A direct listing, of course, is not an IPO because it does not raise capital for the company. So that $26 per share price is not the price by which they will be offering shares to investors. It's rather just a psychological benchmark so that when the market making begins tomorrow, when buyers and sellers are matched right here on the floor of the New York Stock Exchange by the designated market maker, then they have a psychological benchmark by which to start that process. So $26 a share represents about double where they last raised private fundraising in August 2018 at about $11.91 per share. So quite a big jump up for those investors who participated in their Series H round. Melissa.
What are the comps to Slack, Leslie? What do they say in the roadshow?
A lot. Well, they didn't have a roadshow because it was a direct listing, so they only had that investor day. But a lot of investors are looking at a bunch of SaaS companies, software as a service companies. Workday is one. Dropbox is actually one because the potential total addressable market for Slack could be this opportunity to be kind of an app for all needs of an enterprise. So they're looking at various companies that participate in that kind of subscription model that can potentially move beyond messaging, which is what Slack is currently known for, to provide various services for the enterprise. Also, people are looking at PagerDuty and Zoom video communications, which are two recent IPOs, which of course are more than double their IPO price at this point. Also, subscription revenues with enterprise as the target customer.
Right. Leslie, thank you. Leslie Picker at the New York Stock Exchange. Let's trade this. Could this be the next uniform? Direct listing puts a little bit of a different spin on this. And she mentioned the comps, but in terms of how it trades tomorrow, maybe a better comp could be spot. I mean, I don't know.
Well, so the structure here that this is an IPO, it's not an IPO, really, is very interesting. And this is a company that's representative of the fire hose of money that's coming into the VC community and how people are doing it very differently. We've talked about Lyft and Uber. It's a company that's got almost $900 million on its balance sheet right now, if you look at the prospectus, and it's burning a tenth of that a year. So they could do nothing for 10 years at the current rate and actually still have a balance sheet that's surviving. I'm not, to speak about the competitive threats from people like Microsoft or whatnot, but that makes this an interesting story for a market that's looked at very different balance sheets.
Yeah, I mean, in terms of direct listing, Karen, usually you get underwriter support, right? And so that's going to be one sort of factor in how it trades tomorrow.
Right. I'm just wondering, since they're doing it this way, which is more efficient, significantly cheaper.
Yeah.
Right. Do they maybe not get the coverage? I don't know. I think it's an interesting sort of egalitarian structure, right, to line up buyers and sellers this way. I'm wondering, what does it mean for valuation for Facebook, for does it give us any sense of WhatsApp?
And plus, not only do you not have the support, you don't have the lockup. So you have people who want to sell stock. You have them converting B-class shares to A-class shares. So you don't have the lockup. You get a little more pressure on it. But I think you get a truer picture of what the real market is versus having a normal IPO.
The discovery process is more efficient.
Yes, you have that reference point at 26, and then we can gauge it from there.
Yeah.
Can I go second derivative?
Oh, absolutely. I love second derivative. The farther along in derivatives you go,
that's
the more
hurtful, by the way. I have feelings too, Tim. I just want you to know that. We've been bullish on the exchanges now for a long time. NASDAQ has had a tremendous move, but look at where it's trading now. It's basically 96.5, same level we topped out September 2018. I think you're starting to take profits in some of these names. Year over year, volumes have been up. Everything is great, but they've run too far, too fast, number one. Number two, egalitarian is not a great haiku word.
Oh. Well, you could say it's egalitarian, and that's your second line.
It's just not a great haiku.
How about
that totally works.
Egalitarian.
That also works as a second line.
There you go.